All right, guys. So today we're going to be going over levels, right? We're going to be going over support and resistance, but we're also going to be going over plotting your highs and your lows. And we're also going to be plotting the opening price, using the opening price, and why is the opening price significant. And that's pretty much what we're going over today. So this is probably my 10th class of going over levels. And for some reason, people seem to just not get it right. So I have to figure out what's the problem with people not having accurate levels. So let's go into more detail and let's go get those accurate levels, right? So real quick, because I want this class to be a little more interactive for the people that's watching. That way they can kind of feel like they're involved in the class, right? So when we plot our levels, what is the first thing that we want to look for when you're plotting the levels? Anybody know? Aggressive moves, right? That's number one, right? We want to look for aggressive moves, major touches, right? So what aggressive moves is basically when you see price reacting off of a certain level immediately, right? That's how we know that we have good levels on when our price hits a level and it immediately makes a decision, right? So those are the levels you want to focus on because those are going to be your, more levels of significance. Now, first, before I go draw into my levels, I want to go over pretty much what most people are taught when they first, start making support and resistance. When you start making support and resistance, what do most people tell you to do? 3 touches, right? So I'm about to run through an example of what 3 touches look like when you draw a chart, right? So if you do the 3 touches, right? Okay. And I know I went over this before, but we're going to go over it again. And when we're looking for 3 touches, I mean, we just going to be plotting them. Oh, damn. Hold on. Let me delete that real quick. I'm having a slow moment right now. Okay. Let me go here, edit that. Okay, so when we go to that 3 touch rule, I mean, if you do it that way, you're going to be plotting levels pretty much everywhere, right? Because almost every level that you see touches 3 times, right? Like I'm literally not just drawing stuff. I'm literally just doing levels that fast, right? I'm just looking for 3 touches. Right? So once you do it this way, do anybody see a problem with doing it this way? Noise, right? That's one. Noise. Somebody said a headache, too much noise, right? So doing it with this way, you have too many levels. So the problem with this is you're not sure on, what level is significant, what level is really going to, make or break, what level is price really respecting all of that, right? So when your charts look like this, it's pretty much all over the place, right? So this is what you see a lot of traders do, right? A lot of traders on social media, they do stuff like this, right? And then they try to post on social media, yeah, I said that the price was going to go there. Well, of course, I will hope that it goes there because you literally plotted every damn level there is on the chart. So if I will hope that it will go to at least one of your targets, right? So the reason why we don't want our charts to look like this is number one, you literally don't know what's a key level and what's not, right? Now, I might have the argument that somebody might say, well, Jay, I can color code them, right? That's just doing too much, right? That's just doing completely too much. You don't need all of these levels, right? Even the day trader scout, you don't need all of these levels, all right? So you want to focus on making key levels. So how do you find key levels? You look for where price has aggressively made a move off of. And I will recommend for beginners, right? If you're a beginner or even a trader that just want good levels, I will recommend that you start with the line chart, right? So you come up here to this little candlestick tab right here, and then you click the line chart, and then there you go. So the line chart helps give you way better, it helps give you a cleaner picture of, key levels, right? So let's go ahead and let's go plot some key levels now, right? Remember, we're looking for aggressive moves, okay? So is this an aggressive move? Is this level significant? Yes, right. And another thing that helps me make my levels and make sure that they're accurate, you always want to see a level. When you plot a level, you want to see that level. If it's a support level, you want to see that level be tested as resistance as well, right? So when we're looking at this level here, it was what here? What was this level right here? This was what? What do we call this? Support, right? Now, when we look at it, the same exact level, right? We didn't change anything. What is this level now? Resistance. So whenever you're making your levels, you want to have aggressive moves, but you also want to have those aggressive moves use that same exact level as supported resistance, right? You want to have it use it as both, right? And that's how you know that you got a good key level. So that's number one. So let's go ahead and continue, right? So we're just gonna play the yes and no game, okay? Is this the key level? Okay, correct, right? We had aggressive move off of this level here. We bounced, came back, held it as support, bounced again, came back. This was the neckline of a double bottom. That's also another good sign, right? Resistance, resistance here, and resistance here, right? So that's another key level, right? And you just, all you're doing is, and I'm about to go through a million of them, but all you're doing is coming in here and looking for levels that made aggressive moves, and it was support and resistance, right? Those are going to be your best levels, okay? Now, here we go. Do anybody see why I did not plot it right here? Ooh, I really want to see if anybody get this right. Why didn't I bring it? Why didn't I plot this level right here? Look, right, we have what we call liquidity graphs, right? And also what helps you identify that is when you draw it, it makes more sense right here because that was a significant drop, right? Once we ran all the way up to this level. Remember, guys, look how big this move was, right? This move to the upside was huge. And it's immediately as we hit this level, we sold right off. So that's a significant level. So then when we go back and look at that level, here we go. We had a little fake out right here, but then we came back, retested it, bounced off to the highs, right? And now pretty much a significant level. Now, for my newbies or people in general, guys, you're going to have times where price breaks below your level a little bit, might go above it a little bit. That's part of trading, right? That's literally part of trading, guys. You're going to have those times. So don't get too caught on like making sure that, you know, oh, it has to touch immediately to the point. No, play around with your levels, you know, let price tell you where it's going. So now let's go find some more, right? But the key is looking at, you want your resistance levels to become support, right? And you want your support levels to become resistance. That's like the best key that I have for you guys when I make my key levels, right? So right here, I'm going to plot this as well, right? And the reason why I'm plotting this is because what was it right here, guys? This level right here, what was it? Support. And when we broke down, we came back, what was this? Resistance, right? And we had aggressive move, created a double top and sold off, right? And guess what happened? We came back down, that same level right here, we came back down, we bounced off, and what did we do again? We rejected that level again, right? So you guys seeing how these levels are being respected later on down the chart, right? And that's how you know that you're having good quality levels, right? So the rule number one to making levels is, let me go and get my notes out real quick. Everything making sense so far? All right, cool. I should have been saying this last class, but it's all right. That's why I come in more. That's why I come to more classes. Okay. To find key levels. Well, no, I'm gonna put rules to find key levels. To find key levels. Number one, aggressive moves. Number two, support becomes resistance. And then number 3, resistance becomes what, guys? Becomes support. Right? So when you're finding key levels, this is all you're looking for, right? You're looking for 3 things. The rules to find key levels are aggressive moves, support becomes resistance, resistance becomes support. Is that simple, guys? Is that simple for you guys? Is that simple enough? Or are you still confused? Okay, cool. Right? So you just want to have those, right? All right. So now let's keep making them. And you're just gonna have to practice them, guys. I didn't get good at levels until I kept practicing them, seeing what worked, what didn't work. Okay. So let's go find some more. And you just have to go in your charts and kind of just find them as you go and then go from there. So I'm also going to plot this level, right? It will support here, nice aggressive move off of. Then look what it did, guys. This level that we just did, right? Look at that level right there. What do we do? We broke down, we bounced off of it, came back up, broke down. What do we do right here? Resistance, right? Then came back up, ignored it again, came back, resistance, right? It broke above a little bit, but overall it's still resistance, right? So then you're just going to keep doing that, right? But you see how my levels aren't, like, I'm not trying to force it. Like, if it ain't clear and it's not making aggressive moves, it's no reason for me to force it, right? Now I'm gonna have that question. Jay, how often do you change your levels? I update my levels every single day, right? And I know I might have the people that say, Jay, that's too much work, da, da, da. I update my levels every single day. I make fresh levels every day, right? That's just how I like to do it. If you don't want to do it that way, you don't have to. But I personally like to have fresh levels every time that I get on the charts. That's just me, right? So how many of you guys reset your levels daily? 2 days? 2 days not bad. So most of the time. I do mine every day, like every single day. Okay. So now that we have the line chart on, now you have to, obviously, because we have wicks and stuff, you don't just rock with the line chart. The line chart helps put it in the right placement, but then you have to turn back on the candles and then make sure that your levels look right. If you have to adjust them a little bit, by all means, adjust your levels a little bit. But you know, they shouldn't be too far off. You know what I mean? Like, they shouldn't be too far off, right? So as you can see, our levels are pretty much still on the money. It might look a little better with the candles on once you put it on there, right? Because then you see wicks and stuff like that. But overall, like, that's literally it. You know, like, the levels are still being respected. Now that we have all those levels, now, okay, guys, so did everybody understand this? Just making the simple levels. Now I'm finna start getting into the more complicated levels. Okay, so it's pretty simple. So now the simple stuff goes away. All right, so y'all ready? All right, let's see if y'all ready. So now you keep the same levels, but now the simple stuff starts to go away. Okay. So what I like to do now is I like to have what I call gap levels. XPX is probably the best stock to have them on because XPX doesn't have a pre-market. But if you don't want to, the only way you're going to find these is if you turn pre-market off. So you're going to have to turn pre-market off to find these levels, but they are very significant levels, right? So, and they might make you have to adjust some levels. So these are what I call gap levels, right? So a gap level is pretty much when a stock makes a gap. So let me just go ahead and delete all these levels first, so that way I can get you guys to see what I mean, right? So, okay, so XPX is pretty much a good stock to use this as reference. So do you guys see this gap right here? And if you don't know, and you can do it on whatever time frame, I normally use the hourly time frame. The gap is going to be the same on all of the time frames, but I normally use the hourly just because. So okay, so everybody see this gap, right? So we have a gap is basically where there's no candles in that area. So what most traders do is they're taught to put a gap, right? Put a gap and waiting for the gap to be filled. Okay. which nothing is wrong with that. You know, once we break above that high, a gap is now filled. But I've noticed, and nobody has taught me this. This is based off of what I noticed from my experience, right? So if you go on YouTube and you're like, Jay, I've never heard anybody say that. Hey, I found this on my own. Okay. So what I like to do is I don't like to draw gaps anymore, right? You still can draw gaps if you want to, but it's a little too much noise for me. I like to draw the levels of the gap, right? And then make trading decisions based off of that. So let me show you. So I don't draw the gap, but y'all see that this is a gap. Let me just make sure I clarify that. Do everybody see that this is a gap? Where price was non-existence right there. Okay. So now that we have that, I like to plot that level, right? So I don't use it as a regular level. What I do is I use this horizontal ray tool on TradingView. You can make it a regular if you want to, but I just make it a horizontal ray tool and I plot the gap level, the gap, right? So the reason why I'm going to show y'all this is because look how this gap was respected later on down the road, right? So let's go here. I'm gonna make it white just because, right? White for this purpose. So you see how we plotted this gap level and price literally weeks later, right? It came back, and what did it do at that level? What did it do? It rejected, right? So it's respected that gap level, right? So that's why I like to plot them, because they become levels of significance later on down the road. And you can do this with any stock, right? So once you see a gap, I like doing that. I know a lot of traders, they're like, oh, Jay, it's a gap, I got to trade the gap. Normally, I've been noticing that they like to do that. They like to, once you have a gap, they know a lot of retail traders are going for the gap. They're buying calls saying we're going to go for the gap. And then what happens is we end up rejecting, right? To the upside or the downside, like whenever we just see a gap, no matter where it's at, right? So I noticed that happens a lot. So I started plotting that, and when it get there, then they respected it as a resistance level, and I could take puts there. And if it break above, it just break above, and if it don't, then obviously I make money, right? I've did this too many times. Let me show you guys another example of this, right? So that way you guys aren't confused. So do y'all see this gap right here, right? From here to here, okay? So let's go use that again. So look at this. This is an actual trade that I did, right? So this is a gap level. As you can see, we broke down, we ran back up to it. And what did we do? We rejected that level pretty hard, right? So I've noticed that these gap levels, yep, this is like 1,000%, some crazy trade like that. But this is literally my analysis for it. It was the gap level. Either I took the rejection here, either it breaks above and I cut for a quick loss, or it rejects and I make some good money, right? And this is a cool little strategy that I like to use, right? It's pretty profitable, right? Depends on what I want to do, but if you want to, some people, what they do is they plot them up as well. So the gap to the upside too. So, we can have rejections there or rejections there. Like it depends on however you want to do it. So it's similar to drawing the gap, but now that you have a level instead of like that gap, right? And it'd be times where sometimes it won't reject that first level. Like in a bearish scenario, it won't reject the first one. It'll go to the second one and reject, right? So yeah, definitely if you want to, you definitely can plot both. I normally don't plot both right away. If we're in a downtrend, I don't plot both right away unless we break it. You know what I mean? Because I don't like having all that extra stuff on my charts. So like normally how it would look is I would have it just like this. And then if it does break above, I know that it's another level right there. You know what I mean? So it's kind of up to you on like how you want to do it. But to me, just having an extra line right there is just, I don't know. It's just, I don't know. It's like I have like a disorder against it or something, right? But this is a cool little strategy that you can use to like do it. Now, I'm not saying that it's going to work every time, but this is like, we're getting more into like little level strategies. This is an easy little strategy. For example, this is a great example right here. So here go a gap level. So y'all see that? Let's go zoom in. So do y'all see how, I want y'all to see this. So let me replay this. Okay, so this is how your charts will look, right? Everybody listen up, because I don't want nobody getting confused. Every time I teach some new stuff, they get confused, right? So let's say that you were looking at this and you notice that, is this a gap right here, right? Is this a gap from right here to right there? Let me go ahead and draw the actual thing. Okay. So as you can see, this is a gap. So in this scenario, since I'm drawing two lines and I'm looking for us to go up, right? Because the gap up, right? So now I'm looking to take calls if we get back to this gap level as a level of support. So let's go ahead and play it, right? So there we go. We chilling, we chilling, we chilling. And then once they get close to the level, so there you go, hit the level, and there you go, right? It ain't gonna always hit automatically, but y'all get the picture. So you see how we might not have had that level plotted, but you see how it respected that level. So that's a cool little strategy. I'm not gonna sit here and lie to you. I was trading one day and I noticed that that kept happening. So I tried it. I mean, it's a. I ain't gonna lie. This strategy is it's pretty nice. I'm not even gonna sit here and lie. It's pretty profitable too. Like I said, I mean, the risk reward is crazy, right? It's like, okay, your stop loss is literally if it just breaks above. I mean, it's literally that. I mean, so it now what I like to do is, so somebody asked me, how do I know if it's a call or put? Well, first of all, I've plot the gap levels, right? So in this instinct, the gap was right here. So I'm going to plot just the gap in general, right? So regardless if it's a call or put, you're going to draw your gap like this, right? So you're going to say, okay, we have a gap to the downside on that, right? Stay with me, guys, so that way you're not confused. That was actually a great question, though. Hold on. Shit. My bad, y'all. Hold on. Okay, so let's go back and replay that, right? So I'm trying to get you guys to know, because somebody asked me, how do I know if it's for calls or not? Well, let's start with this area, right? So this is what the gap looked like. So it would be a regular day for you guys. Can you guys still see my charts? Okay, cool, because I thought I clicked off. All right, so look, you get into the market, right? This is a regular day for you, right? You get into the market. This is a regular day for you. You guys see, this is how the gap is going to look, right? You guys all see the gap right here because it's already going to be like that, right? That's how the gap is made. So normally this is how most traders going to do it, right? They're going to just draw an actual gap. Nothing is wrong with this, but they're going to draw the actual gap, not knowing that there is a trading opportunity if you do it a different way. So most likely you're going to draw the gap like this naturally. That's whenever you draw gaps, you're going to do that. You found the gap, and you're like, okay, if XPX decides to come down, then we can take puts or whatever you decide to do. So instead of me drawing a gap, what I'm going to do is I'm just going to plot those levels right there. So here go me. I come in, I say, all right, I got that level, and then I got that level, right? So then I start playing my analysis. Okay, we above the gap, right? We are above the gap. So if you're below the gap, you can look for rejections. If you're above the gap, you can look for bounces, right? Did that make sense? Actually, yeah, let me put that down. That might help you guys. Above gap, you want to look for bounces. So if price is above gap, bounces, and then below gap, rejection. Like I said, so how I will play this is, okay, that's a significant level. And I'm not gonna lie, doing it this way, this has saved me from so many like chop ranges and all of that, because this level is served as a key level, right? So literally there's been times in trading where I would say, I'm just gonna wait till it hit either level. And if it never does, I'd never take the trade. And literally I've saved so much money from just waiting on these levels, right? This is a very profitable strategy. So like I said, let's play it back. So we see that it's trading above the gap. So if we see it get back to that gap, we take calls. There you go. It hit it. Take calls. You're in calls or whatever. Break above. And yeah. I use the hourly for this strategy, but I mean, you can use whatever time. I would think the hourly probably would be the best, but I use the hourly for everything. So the hourly and the 15-minute. Okay. So let's just let it play out, and pretty much your move was from there to there. You know what I mean? Somebody just said, hold on, let me stop it. That's also another great analysis. Somebody said falling wedge. Yep. So we had a falling wedge here. It probably would look better on the lower time frames. So let's go down here. So yeah, you got a nice little falling wedge there, falling wedge pattern. So there we go. And then we broke out, right? So we had the falling wedge pattern, gap level, great trade, and just ride it up to your previous support and resistance levels that we already had. So this is another key level right there. It literally goes right to the key levels. You hear me? Like, here we go. Support here, resistance, resistance, support, support, resistance, and then ran right up to it. Okay. So did everybody understand the gap? I'm gonna go over some more, but like, do everybody understand? Kind of like understand? Is there anything confused? With XPX, it's going to look like this. There's no such thing. But I say like it's easier to find the gap levels with extended hours turned off, like because they're going to show the actual gaps, right? So you could turn the extended hours off. After hours, yeah. So yeah, pretty much. So it's simple, guys. Don't let any new strategy confuse you. It's pretty much simple, right? When do you plot the gap level? So in this particular XPX, I let the market open up first. And the reason why I say I let the market open up first is simply because, first of all, you're not even gonna have a gap until the market open. Also, this strategy is also great for people that don't like to trade the first couple minutes of the market being open. So if you're a person that literally sucks with like trading open, like me, this strategy is definitely great for that, like just looking at gaps. So let's get off of XPX and let's go look at, like an actual stock that you guys can trade. So let's go look at Apple. Let's see. Like I said, you still want to have regular support and resistance level, but this is a cooler strategy that you can use. That's it. Like I said, I really only do it with XPX, but let's see if Apple can give us something. Probably not. Apple been in this range. I can't really find a good one on Apple. I can't really find a good one on Apple. It literally works only really good with SPY and them. Like we had one here similar to the XPX one right here where we had the gap. So it kind of tried. So this is an example where it kind of broke above and it tried to reject the second one. So pretty much you could take the rejections there. Apple is going to be all over the place. Maybe Tesla. Let's look at Tesla. Like I said, it's mainly for like stocks like XPX. I don't trade it with any other stocks. Most stocks, I just use regular support and resistance. Like, yeah, it's way more effective with XPX. But the reason why I'm saying that is because I trade with the market. So there's been times where, for example, guys, so just the reason why I'm trying to tell you guys this, the reason why I like doing it with XPX more, like, or SPY, whatever you want to, XPX, SPY is the same thing, is because, guys, if you have a gap level, right, and you think the stock is going to bounce, if SPY bounces, what is most likely to happen to the overall market? Bounce, right? They're going to bounce with it. So what I normally, I'm just being honest with you guys, what I normally do is I don't come to other stocks and look for those gap levels, right? What I normally do is I am watching those gap levels on XPX, and then I might want to trade Apple. So Apple might be showing some bullish context that's telling me while XPX is showing me a bounce on the gap level. So it's kind of like I'm using those in conjunction, right? So that's kind of how I personally do it. But like if you want to try and with other, other stocks and tickers and practice it, you can, but it's all up to you. I use it with mainly just, XPX. Now I will say the market has been choppy as hell. So just keep that in mind. The market's been choppy as hell. So it's been hard to get any direction, but just keep that in mind. So yeah. But okay, so that's that. So I'm gonna have more examples throughout. Like, let's see. Hold on. Let's see. Yeah, you just gonna have to go and practice. And the market been so ugly. But yeah, I use this strategy a lot. It might show a little better. Actually, it shows way better on the smaller time frames as well. I use hourly, but the smaller time frames can help as well. So you got a gap level there. So we all know if, that's a gap level in case XPX decides to come back down there, we can make a decision off of there. You know what I mean? So it's like one of those kind of situations. Let's see. Is it another one? No, that's pretty much it for now. I'm gonna show you more examples as they come by when I do trade them, but you can go and practice these yourself and kind of find them. So like here go another level that we haven't tested just yet. So you're just gonna have to practice it, guys. So that was just like something you guys should go in and see, and then you can see for yourself. But other than that, you don't have to do that. That's just a strategy. You can just go regular support and resistance. Okay. Okay. So next is, now this is something that you actually can use on like individual tickers, right? Calls if it bounce off gap and puts if it drops below. Yeah, and you can take puts if it drop below the gap as well, if you want to. Normally I don't do it. Normally the only time I take puts is rejections, not really breakdowns. But it's totally up to your trading strategy. I personally, whenever I take a put, so just so you guys can kind of understand my strategy a little bit, the type of trader that I am, right? So let's say that this is a support level. I don't like taking these type of trades where we break a support and then you enter puts. I hate those type of trades, right? I personally don't like those type of trades where we do stuff like that, right? I rather us break below and then retest that and then retest that support as a resistance and then take it down, right? What's happening, guys? I don't know. Y'all be talking about some every class. Let me just go ahead and do this. Hold on, guys, real quick. Okay. All right, guys. While we in class, make sure that you guys realize that your cameras are, some of you guys' cameras are on, and people can see you. So just letting you know, FYI. All right, so that is how I like to trade, right? So most traders, when they first come into the market, they're they taught to trade the breakout. So when they see that a stock break, remember this is our support, right? When they see a stock break it, they're taught to buy puts immediately. How many of you guys have bought puts on the breakdown and then it immediately came back up and stopped you out? Pretty much everybody, right? So to eliminate that, I like to basically make sure that the support is valid, right? So I like to make sure that once we break support, we then take it at resistance, right? And then I take my trades, right? So it's pretty much, similar to the overall structure of the market, right? So like when we're in a downtrend, okay? So in these examples, you only want to take puts. You want to take puts there, there, and there. You never want to take puts at these, right? Because the problem is when you take it, it pull back on you, it stop you out just to go your way. So it's better to take puts at resistance levels, right? And that's just how I personally like trading. So here we go. It was support became resistance, support became resistance, support became resistance, support became resistance. And then those gave you better trading opportunities, right? So that's just how I like to trade. That's just kind of me, okay? Okay, so, all right, so now let's get into one of the strategies that levels as far as, so you got gap levels. So I told you guys gap levels. I taught you to make regular support and resistance levels off the key levels. And now let's introducing opening price, right? So this is pretty key. I'm normally have my people that say, Jay, how do I get opening price? Opening price. Guys, keep your life simple. Just use Robinhood. Right? That's all you gotta use. Use Robinhood. You can use Robinhood or you can use TOS, whatever you can use whatever you want to use. But I just go on Robinhood and I look at the stats and it literally tells me right then and there. So Netflix opening price. So let's go look. All right, so Netflix opening price was, Tesla was a good opening price rejection. Okay, well, let's go look at Tesla then. Let's go, that's probably a quicker one. Okay, Tesla, what was Tesla opening price? I got it. Tesla opening price was 175.81. 175.81. Okay, so here we go. So Tesla was that was their opening price. So let's see if that level was significant, right? So the opening price is where price opened up for today. And as you can see, Tesla, what did it do, guys? It literally, what did it do? Rejected, right? So that's the opening price, right? It came up, opened it, we stayed below the opening price, came back to opening price, retested it and rejected, right? So that was a cool little thing that you can use. So that was Tesla's opening price. So that's another thing you can use that for some type of, whatever you want to do. The gap level strategy actually was in play as well. So it's like literally like it's no right or wrong way to trade, it's just what you prefer. The gap level was from right here to right here. So as you can see, we had an opening gap. And as you can see, the gap level was actually a little more on the money than the opening price. But I ain't gonna lie, they kind of like back and forth with it. You know what I mean? So it's kind of like they back and forth. Like sometimes the gap level works better. Sometimes it all depends. But it has to be a gap. And that's another reason with the gap, the opening price is probably going to be a little more reliable long term, is because sometimes stocks don't gap down, right? The only way you're going to get a gap level is if the stock actually makes a gap. Sometimes stocks open right where they closed at, you know what I mean? So it ain't really much to have, and that's why gap levels can have trouble. But when you do notice a gap as clean as this, then you're able to do that, okay? Opening price, yes, that's the first candle that was started for today, the opening price of it, right? So delete this white line because right now we're not talking about gap levels anymore. We're talking about the opening price. This is like the easiest price level to find. I do not make those a key level. I don't make the gap levels a key level. I don't make them like a regular level. I make it a different color so that way I know that that is the opening price. So as you can see, in this situation, we were below the opening price. You could have got ready to see what price does at the opening, and you could have took a trade off of that. Let's go find another example of this. Somebody give me another opening price for another ticker, preferably one that moved today. Let's do HD, okay? It's crazy that you said HD because that was kind of HD. I don't know why it was in the back of my head. So HD. So HD opening price was 315.74. So we're going to look for 315.74. 315.74. All right, so today, Monday. Where the did they get that at? Hold on, guys. Wait, is that the right opening price? Oh, okay. But I'm trying to see where they got that level from. Yeah, that was the opening price. Okay. All right, so here we go. So with Home Depot, I'm not gonna lie, you know, this one wasn't gonna be an easy trade. But overall, as you can see, the opening price pretty much flirted with the opening price pretty much all day. So like we do have the opening price. So you know, if you were a scalper, you could have caught some scalps off of it if you wanted to. Once we broke below, as you can see, we started rejecting it, and then we broke back above, and we kind of just ran up. So you see how like the opening price is still significant. Like it's literally like an area where price likes to hang around that, and you also can make trading opportunities of it, right? It's just some trades are going to be better than others. Guys, give me NVIDIA opening price. I'm gonna try to do the work. What's NVIDIA opening price? So I can practice doing the opening price. $153.31. Yeah, you can hover over the candle too, but I'm kind of lazy, so I'd rather just do it that way. 151.30, 153.31. Bruh, y'all playing. I know I was thinking to myself, I'm like, I don't remember the video opening up at 153 though, because I was in the video and I'm like, if it opened up that high, damn, it's always that one person. One fifty, 135. Yeah. Let me go look. I just use Robinhood, so I ain't gonna lie to you. The video, and some people might have little different ones, but they shouldn't be off that much. Oh, Robinhood was 150, 150. Okay. And on TradingView, it looked like it might be that too. Yeah, 150, 150 look way better on TradingView. Yeah, it was 150, 150. Okay. So here we go. NVIDIA opening price, right? So NVIDIA pretty much stayed above its opening price pretty much all day. Not really any good trades off of the opening price. I mean, like I said, you just have to go in here and practice. Sometimes those opening prices will be significant, you know, in other areas, but overall, nothing really too much about the opening price. It pretty much stayed above. But the reason why I'm showing you guys this is if we were pushing like this above the opening price, what would you have did if you seen us retest this opening price? What could have been a trade? Like, what could have been a potential idea of a trade? Calls, right? You could have took calls, right? Because like we can get a retest at the opening price. You could have took calls, right? So, just stuff like that definitely can help. I really want to get like a real good example. But like I said, every day they're not going to respect it. But it's always great to plot your opening price regardless, right? Because it will be significant, if price decides. Guys, did anybody know where price actually respected its opening price today? It was choppy, so we probably not gonna find nothing today, but what moved today? Disney? Yeah, let's see what Disney did. Disney, the opening price was 110. Why did Disney spike so hard? Oh, okay. So here go Disney opening price. We pretty much tried to hold above. We broke below. This is actually a trade. And let me actually tell you guys, this is actually a trading idea. So sometimes what a lot of traders do is sometimes if price, breaks back down below the opening price, what they would normally do is they will take puts and then where will your stop loss be? Where will your stop loss be? Right above the opening price. So you pretty much can hold puts as long as it doesn't break back above the opening price. So that's a cooler strategy if you want to. Somebody said Baba. So I'm just trying to get you guys to see other things. Like I said, you could take what works for you, what doesn't. I'm pretty good with, I'm not gonna lie to you guys, I'm pretty good with the gap levels and then trading my regular levels. But it's totally up to you. Baba opening price was 78.98. So like I said, all I do in the morning is I would just go ahead and plot my opening price just in case we respect it later on down the road, right? You don't have to be all fancy and all that. Just plot it and just to see. 78.98. Damn, we should have been playing Chinese stocks today. It was a nice drop. All right, so there we go. As you can see, we opened below the opening price and we just sold off. So, like I said, it depends. The price can be, respected. It can be whatever it wants to be, right? It's just totally up to that. But I will say, referring back to my gap levels, look what we have here. So, like I said, it depends on what you would rather, trade. So this is how it would have looked, right? So referring back to my gap levels, I would have plotted it just like this. So we are what? We are what now? We are what for the gap levels? Let's see. Now I'm trying to see if y'all really, I need y'all to interact. We are, what is price at right now? What is price doing? It's trading under the gap level, right? So what will we be looking for? Puts, right? We will be looking for to retest the gap. Either one. It don't have to be, it's either one. As long as it's below the gap, either one. So this is exactly what we're looking for. We're looking for rejections from here to here, or rejections from here to here. You know what I mean? Whatever way I want to do it. So let's see if it played out. Exactly. This is a good example. Now that I think about it, Baba do make some really good gaps. Like I said, I only really do it with XPX, but now that I just thought about it, Baba makes really good gaps. And yes, it doesn't matter the time frame. I'm not gonna lie, actually, for my scalpers, this is actually a great strategy for you guys because this strategy works on the 1 minute time frame as well. Actually, it works a little better on the 1 minute time frame. A little like the 1 minute to the 5 minute works a little better for my scalpers. By all means, have fun, right? But let's go ahead and let it play out. Okay. So there we go. Look, rejection right there. Took puts. Stop loss as long as it don't break above. Look how money that was. Yeah, see how money that was? Look at that. What did it reject off of? Okay. Yep, was breaker retest, right? Okay. Hold on. Let's see if you can get some more. Hold on. Support. Retest it right there. Actually, let's run this trade back real quick. I like this trade a lot. I like this trade. I'm about to break down this exact trade and how you could have took it, right? Using a whole replay mode. I like this trade. Right? Okay. So number one, you plotted your gap levels. And so right now you're looking for, pretty much rejections at either level, right? So you let the stock play, right? So there we go. We're there. So now you realize that we're at that gap level. What you can do now, you can wait for this candle to turn bearish wherever you want to do it. But now you can start your position. Okay. Got to that level. You can have your stop loss either right there if you want to make it above. I normally do way lower than that because I don't really need to give it that much room to know if I'm wrong. Your target is going to be that low. Do y'all see where I'm getting this low from? Do y'all see where I'm getting this low from? Cool. So there you go. You take your trade. Took puts. As long as it's going down, you good. As soon as it hits your target, you're out. Hold on, we're not out yet. We're out, right? So we could have got out right there. Now, since we're at that level, now if we want to take puts again, we're now looking for us to break these lows, retest these lows, so then we're going to enter again right there. And now our risk to reward box is going to look like this, right? So now we're looking for a breakdown, right? We don't just take puts just because it's at a level. So it ain't break down yet. It bouncing off right now. There you go. We don't chase the first move. If you did, you did, but I'm not chasing the first move. If it's meant to be, it'll come back, right? So now that we broke that support level, here we go. It's really going to be, I will consider this more of a zone kind of level. So let's go ahead and delete that. It will be more, that area will be more like this because you have too many rejections in one area. So it'll look more like this, right? So then if we come back into this zone, that'll be a retest and then we could take puts again. Okay, I don't need to take the first break. I never take this move down. I always let it retest. Okay, now it's retesting, right? So now we could take puts again with a stop loss above. And now what are we targeting? What are we targeting? What are we targeting? Where will we find the new target? The low, right? So let's go ahead and target that low again, right? There we go. So now we're going to draw our risk reward box, stop loss right above, and we got a nice little play going on here. And then we just let it play again. Took puts again. There we go. We targeting that low. There you go. There you go. We hit again. All right. And then we're out. So did everybody kind of understand the concept of that? Was that like a simple trade? So it was like you had a break and retest, you had the gap level, you got pretty much opportunities, right? And it takes time, right? Trading is simple, but it's all about the practice and you seeing it on a live chart. Yeah, it's easy now. It's easy now while we looking at it. But can you do it when the chart is actually moving, right? You have to look at these things, but this comes with time, guys. It comes with time, right? In the moment, definitely different, but you just got to practice. Like, this is what I do. Like, I'll just be practicing it. But everything that I'm teaching you guys is here. It's literally here. I've taught you guys this. It's literally here. Nothing that just happened is nothing that I haven't taught you guys. Nothing. Break and retest. Now you just learned the gap level, so you can argue, Jay, you didn't teach us the gap levels. All right, I'll take that one. I ain't teach y'all that one yet. So there you go. I just taught it to you. There we go. We got a rejection off the gap levels, and there we go. We came back down. We did not take this initial move down. The reason why I like trading the break and retest is I love the break and retest. And the reason why is because the break and retest gives us the target, right? The break and retest gives you an automatic target, right? So where you can sell your position. People always ask me, Jay, when do I sell? When do I sell? When do I get out? When do I get out? The break and retest gives you the next target, right? So let's go to the drawing board real quick, right? So, and I'm gonna ask you a question in a minute, but let's go look at the drawing board real quick. So here go the drawing board. Okay. All right. So we're going to the upside now. We have a breakout and we have the retest. Where's my target, guys? The top, right? Okay. So we're going to plot that top. Even if you didn't already have it plotted, go ahead and plot it. So now when you take calls here on the retest, there you go. It breaks that area and there you go. It hits your target. Now it broke out again. What is it most likely going to pull back to? That previous top, right? So here we go. Now, if we want to take calls again, what is our target? The previous top. Okay, so let's say we go to the previous top and then it doesn't break a high. Do we take puts just yet? You can, but overall, do I teach you guys to take puts right away? No, right? Now, I want you guys to let me know when I'm going to take puts. Damn, I'm trying to fix it. Do we take puts yet? Are we taking puts yet? No, right? What about now? Hold on. What about now? Are we taking puts now? No, right? What are we waiting for? We're waiting on a retest. Now, are we taking puts yet? Okay, cool. So now what is our target? That previous low. It was a higher low, but now we're coming back. The same stuff, the same levels you got to the upside are the same levels you're going to have to the downside. Price literally does the same thing, the low, right? Did everybody see that? Did this make sense so far? And I'm going to keep, I know my OGs like, Jay, you didn't went over this 10,000 times. I'm going to keep going over it 10,000 times because that's all that trading is. That's all that it is. That's all that it is. The more you look at it, the more you practice it, the better you get at it. It's the same thing, right? Same thing. The same levels you got going to the upside or the same levels you got going to the downside. Literally, that's it. Stop making trading difficult, guys. Stop making it difficult, right? Too many people try to predict the low. I be trying to tell people that you don't have to predict the low, right? They're like, well, Jay, I'm going to just take push down here. I'm trying to predict the low. You don't have to predict the low. You don't have to predict the low. Like, literally, what I mean by that is, so I want people to understand what I mean by that is, I have too many traders where they taking a breakdown. Like, so let's delete this. This is what I have too many traders doing this. And I'm not even going to be mad at you that you do this because I used to do it. Too many traders, when they take it puts at the break of support, they're trying to predict how low this is going to go before it pull back. So they take a trade. You don't have to do that. You do not have to do that. All you have to do is be patient and let it come to you. I tell myself this all the time. If it's meant to be, it will come. It will literally come to me. And if it ain't, it ain't. Right? The only time that I will ever take a breakout, let's see if y'all been listening. When is the only time that I will take a breakout like that? When is the only time? You got a 1, 2, 3 pattern? Hey, that's good. Y'all good. I ain't think y'all was gonna get that. I wasn't even thinking of that, but that is a time. But what is another time? What is another time? I told you guys this when we very first started. The market, not the trend line, the market, right? The market is going quickly. So, like, okay, for example, this is what I mean by that, right? So let me go ahead and break this down for you real quick. So let's say that SPY let's say that this is SPY, right? Nope, not high volume. I don't use volume. Remember, guys, I don't use volume. For all my new people, I don't use volume. Okay. So all right. So let's say that you're trying to trade Apple, right? Let's say that you're trying to trade Apple. And right now you're looking at SPY. So let's say that SPY does this. SPY, you're trying to take puts. I'm trying to puts right now because we're in a bear market, but overall, so you're trying to take puts. So as you see, SPY, this is a support level. SPY broke the support level, retested it, and getting ready to break down. It's starting to break down. Okay. And let's say on this side, this is Apple. And Apple looks like it's just coming down really aggressive, right? Since I have the confirmation from SPY, I am now willing to take the breakdown on Apple, because sometimes when that happens is SPY didn't already get the break and retest, and now Apple looks strong momentum to break to the downside. Sometimes you're going to get a move just like this, where Apple is just going to die because SPY is now going lower. So that's the only other time that I will say that a breakout is okay. But most of the time, that this is not even that common. You know what I mean? So most of the time, you're going to wait for the retest. But if the market is just really, it already did all the technical stuff and it's really breaking down, and now you see these individual names look like they break down, then by all means, you can take the breakdown, right? But don't make that a habit, right? Make it a habit of taking a retest, right? Retest trading has the best thing about trading this way. It eliminates FOMO. I have no FOMO when it comes to trading. Maybe every now and then, but overall, it teaches nothing but patience. And as you guys know, in this market that we're currently in, patience is the game of it. Like literally, we didn't even trade today because it was like we just waiting because nothing was happening. So the retest helps build patience. It helps build confirmation. It's better risk to reward, and it gives you better targets, right? Now, peep this. So let's say that you take the breakdown on Apple without a retest. I'm about to really stop some people up right here, okay? Let's say that you took the breakdown on Apple. What is your target for Apple? Oh, let's see if we get it. Because we took the breakout. Obviously, it's going to be the next support, but what is really your real target for Apple? Hold on. Somebody was on the right spot when they said it. I'm not going to say it just yet. There we go. When SPY gets to what? The low. There we go. Because if our target for SPY is there, and we know that SPY could potentially bounce right there, then, and we took Apple because of SPY is breaking down, it will make sense that we're watching SPY. So when SPY approaches the low and we decide that we want to get ready to take profits, we are automatically going to want to take profits on Apple, right? Because we took Apple because we used SPY for confirmation. So why are you ignoring SPY now that you're in Apple? You see what I mean? That's be the problem with a lot of traders is they didn't took a trade because of SPY, but then once they in the trade, they say F SPY. I'm only focusing on this individual stock. Then when they in it, they're like, oh, hold on. Why is the stock reversing right here? Then when you go back and look at SPY, SPY is approaching that low, right? So that's why I try to get people to understand, trade with indexes. Trade with the index, guys. Look at the index. It's going to help you, give you more confirmation, more confidence to take your trades, right? Does that make sense? Cool, cool, cool. Okay. So any questions regarding this or just trade the indexes? Yeah, but sometimes indexes be on that BS. SPY has been on that BS for like 3 weeks now. But yeah. Any questions for this? Yeah, Tesla was money today. That was a great retest. Any questions or forever hold your peace? We're going to go over these more often, so don't worry about that. So today was levels. I'm going to go over trend lines. We're going to go over this a lot. You're going to see that my mentees will tell you if you're this is your first mentorship, I'm going to go over this every single day, every time that we have class. Is playing the opening candle similar to playing the opening range? Yep. That's actually kind of what it is, the opening range breakout method. Yep, pretty much the same. Why is volume not important? So volume is important. I'm gonna put it this way. The reason why I don't use volume is I personally feel that if you know how to read charts, the chart should tell you everything. You don't really need the volume, right? Plus, most people only use volume to actually understand like when a stock is getting ready to break out. So it's kind of like I don't trade breakouts anyway, so I don't really need the volume. You know what I mean? It's like it don't align with my strategy because I don't trade breakouts, right? Most people are looking for volume because what I tell you, you want to have high volume on the breakout. Well, I don't trade breakouts, and the volume be lying, bro. Like the volume be straight lying, bro. I swear, the volume be sitting up here lying. So I just don't. I just feel like if you know technical analysis, you should be able to just like you should know. You know what I mean? It's like you should know market structure. You should know that you have to do it. Fake outs. We don't have to worry about fake outs, right? Because yeah, we're gonna have fake outs come with the game, right? But remember, our strategy, the way we trade is literally, so let me just show you. I'm trying to show you when it comes to fake outs, right? So think about the way I trade. So we have an uptrend, okay, pullback, uptrend, pullback. And let's say we got a little fake out here. Yeah. You got some realistic stuff right here. Okay. All right. So somebody asked about fake outs. So let's go ahead and get on these fake outs. Okay. So there we go. Okay. And right there. All right. So somebody asked about fake outs, and I'm so glad that you asked about fake outs, right? So let me go ahead and show you why the break and retest strategy don't really have to worry about fake outs too often, right? I mean, obviously in stocks, you're going to get faked out, but look at, check this out, right? So we're taught to buy at these points right here. So I'm gonna just put this right there, or I'm gonna make it green. Okay, so we buy at the green, right? We buy the retest. Okay, retest. All right. So you notice how this is our resistance level. You notice how so this is what? What is this right here, guys? This is a resistance level. What is this? This is what? This area right here. We call it liquidity, but I'm saying this is a fake out, right? This is a fake out. What were we doing at this level anyway? No, I'm saying, what were we doing at this level? We were taking profits. You know what I mean? Were we buying puts yet? No, right? So even though it was a fake out, our strategy never told us to buy it here anyway. This is a fake out due to breakouts, right? If you're a breakout trader, yes, you got fake the F out. And that's why the break and retest strategy is what I like trading, because literally you talked about a breakout, so you didn't bought the contracts at a premium. You bought the contract on a premium spike. Down here when we bought the contracts the contracts were $100. You decided to take the breakout. Now the contracts are $250. We're taking profits at $250 because we bought down here to that top. So then you buy it up here at $250. It goes to $270. You sending your screenshots in the chat. Yeah, I'm like that. I'm hard. I'm the best trader out here. And then out of nowhere, we never hear about your trade ever again after that because you didn't bought the breakout. You now the volume then spiked right there. You thought it was really breaking out, and then it just pulled back on you, right? When we don't hear back from you, you know, and that's how the chat go. They go like they be gone. I'm trying. This happen all the time, y'all. This happen all the time. All the time. I see this too many times in the chat. Yeah, I'm up $300 right now on SPY. And I look on the charts, I'm like, yep, they didn't bought the breakout. And next thing you know, they get quiet as hell. You don't hear from them again. And then, hold on, if you decide to ask about it, they be like, oh, I sold already. I sold in profit. You know damn well you ain't sell in profit. How the hell you sell in profit? You just like, bruh. I've been doing this, bro. I've been in too many discords, bro. This is the funniest thing ever, bro. It's crazy as hell. Like, I know damn well you did not take, you a lie. Like, you just a lie. You know damn well you ain't take no profits. Stop playing. That pullback gonna hurt anyway. First, when you get that first wick, the contracts are gonna go back down. Like, if we go up here, you buy them at 250 right here, you get a wick right here. That contract is most likely already at 250 again. Right here. So by the time it even come back to this low, it's like 220 by now. You know what I mean? So it's like, yeah. So, but like with the break and retest strategy, we're not even doing anything right here but taking profits. Now, when do we take puts on this setup? The retest, right? So when it broke below the swing low, it retested it. Now, that's when we take our puts. Okay. And then we take puts here. Okay. There we go. We took puts there. Do it make sense now? Okay. Then also you can use these same things as, so let's go here. So now you can kind of like throw some patterns with it, and we're going to go more into it, but like, let's throw some patterns with it. So here we go. You might have like a low right there. So we go here. And then we have a low right here. So let me draw that. We have a low right there. Okay. I'm just trying to get y'all to understand market structure. So we have a low right there. We then break back above the low. Normally have a little bit of a breakout, retest that area again. And then what do we have, guys? What pattern is this? Let's see. What pattern is this? A falling wedge. So then we break out. There you go. Boom. And it's literally, guys, I don't think y'all understand. It's the same thing. Like, it's the same exact thing. Okay. We reject that high. And we do it all over again. Class is in, my bad, I messed up that one. Okay. Class is in session. There we go. Now, you have to practice these, obviously, but you got your double bottom, your retest, and then where do we buy yet again? You could have bought right there, right there, right there, and then there you go, right? Make sense? Yes or no? Yes or no? We're good, we're good, we're good. Yes or no? Cool. And it just takes time, right? Start with the line chart, start practicing drawing stuff like this, and it just takes time, right? That's all that it is. It just takes time. It takes practice. It just takes time. You just got to practice it. What I would do is I would start drawing them first. Just practice on drawing. Just draw different wave structures, right? Just go in there and just draw different waves, and then practice. Where would I enter? Where would I enter? And then literally, it's going to start showing you on the charts, guys. It's going to start showing you on the charts, right? It's going to start. You're going to start seeing this on the charts, right? It ain't always going to be pretty, but you're going to start seeing it. But how many of you guys have traded the break and retest so far? How has it been? Money, right? It's pretty simple. Like it, if it lose, it lose, but most of the time it's pretty good, right? It's very, you just pretty much, you can make a lot of money off of it. So now with entries, we're gonna go over entries again tomorrow. Not tomorrow, Wednesday. We're going to be going over this again with more like on live charts, and we're also going to go over entries. But overall, guys, I mean, entries, I'm gonna just keep telling you guys, when it comes to entries, like I try to tell people, you want to obviously have a great entry, but it's more about your exit rather than your entry, right? You know, if you enter here, you might have the candles play with you a little bit. It might flirt with this level a little bit, but as long as it's holding, you're good. You know, as long as you know that your exit is up here and it's not breaking below your level, you know, hold your trade and trust your analysis, right? You know, and go from there. This is actually really, really nice. Somebody take a picture of this. This is a masterpiece right here. Masterpiece right here. Hold on. Let me put the X's on here so you know where to take puts at. Yeah, it's a masterpiece. This is beauty. This is what, see, y'all, a lot of y'all like art. This is what I call art. Now, why would I, hold on. Why wouldn't I take puts right here? Why wouldn't I take puts right here then? It's in midair. Good job. It did not retest its support. This is our support level. It broke back above our support level, right? There was our support. It broke back above that level, so there was no shorts there, right? So that's the first indication that the market is now looking to reverse, and then you can start looking for following wedges and stuff like that, right? So there you go. Take a picture of this, y'all. Go hang this up. Let me add the other thumb right here. Look at that. Y'all show me better artwork than this. Hey, I mean, this is my first NFT. Let me go ahead and label my stuff. There we go. Copyrighted. Now y'all can take a picture of it. But so other than that, guys, that's pretty much they told us so that can get cropped. All right, I got you. I'm gonna do what they be doing on Instagram when they be trying to tell that it's their picture. They're like, bro, that's my picture. They put it all, you can't even see whatever you're trying to see no more. They didn't put it all around the price. Can't even see it no more. But overall, guys, that's it. That's all I have for tonight. This was actually a very quick class, so this video will upload a lot faster. But overall, guys, just go in there, practice. Hope that you guys learned something today. I will see you guys on Wednesday, and we will be going over trend lines and stuff like that. You know, so see you guys, and I will. Hopefully, we get some great action tomorrow in the markets. Who knows? But we'll see. All right.